Good morning. Today is Monday, August 7th, 2023. I hope that this finds you after having a wonderful weekend. I'm going to start off today with another reminder that the week after next is our annual Capital Cruise Client Appreciation Dinner event. If you are a client of Capital Consulting Group, whether you work with Dan, Rana, or myself, consider this your personal invitation to join us for a wonderful evening on Lake Minnetonka. The boat is filling up, and we do not want you to miss out. So you can get all the details and RSVP on the events page of our website. Again, that web address is www.investwithccg.com. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Stocks retreated last week as bond yields increased following the Treasury's announcement indicating a larger than expected funding need and a downgrade in the federal government's debt rating. The Dow Jones Industrials average dropped 1.11%, while the Standard & Poor's 500 shed 2.27%. The NASDAQ Composite Index lost 2.85% for the week, and the MSCI EAFE index, which tracks developed overseas stock markets, tumbled 3.27%. Stocks struggled as investor sentiment turned cautious amid rising bond yields. Markets were rattled initially by news that the Treasury raised its borrowing requirement for the third quarter by more than $250 billion, and on news that the Bank of Japan announced it would allow bond yields to rise after years of capping them. Rising yields continued to pressure stocks in the wake of a surprise rating downgrade of U.S. government debt by a major credit rating agency due to its belief in expected fiscal deterioration over the next 3 years. Stocks rebounded Friday morning, rising on modest employment data, only to reverse and add to the week's losses. Fresh employment data last week gave some conflicting signals about the labor market. A new JOLTS report, JOLTS is Job Openings and Turnover Survey, the JOLTS report showed a small decline in job openings and layoffs in June, leaving 1.6 job openings for each available worker. Automated Data Processing, or ADP's employment report, reflected strong private sector hiring, with a 324,000 increase in jobs, exceeding the consensus forecast of a 175,000 gain. The government's monthly employment report saw a cooling in hiring as employers added 187,000 jobs in July. This was slower than seen in the first 6 months, but enough to shave the unemployment rate from 3.6% to 3.5%. As always, we will continue to keep our finger on the pulse of what's really going on in the markets. This week, we are keeping our eyes on the Consumer Price Index and jobless claims on Thursday, and then the Producer Price Index, as well as consumer sentiment on Friday. Earnings season continues. A few companies reporting this week. We'll be watching Eli Lilly tomorrow, and then kind of get an update on Disney here on Wednesday, to name a couple of the bigger names. If we're not investing your life savings for you, you can learn about our personalized approach at smartmixportfolios.com. So, why is the Fed focused on your paycheck? The Federal Reserve has a dual mandate: both manage inflation and maximize employment. But sometimes those economic goals conflict with each other. As you can see in this chart, labor shortages in 2022 pressured businesses to lift wages, which in turn put more money in people's pockets. More money leads to more spending, which can produce inflation. So, from the Fed's perspective, employment improved last year, but inflation worsened. But 2023 is telling a different story. Median wage growth is heading lower while inflation is dropping, which is precisely what Fed Chair Jerome Powell wants to see as he evaluates what's next for short-term interest rates. He said, I would say it's certainly possible that we will raise funds again at the September meeting if the data warranted. He said this at the Fed's July meeting. And he added, and I would also say it's possible that we would choose to hold steady. And we're going to be making careful assessments, as I said, meeting by meeting. So, with wages lower and consumer prices trending down, we're closer to the end of the rate hike cycle than in the beginning. So, stay tuned. The next Fed meeting is in September, but Federal Reserve officials will be making several speeches during the next few weeks. All right, that is it for today. Thank you for staying until the end. I have another riddle for you. Again, if you're the first person to post the correct answer down below this video in the comments section, we will send you a gift card for coffee on us. Congratulations to Roger in Eden Prairie. You correctly answered last week's riddle. Roger, thank you so much for participating. We will be getting a coffee card out to you in the mail today. So watch your mailbox. Again, congratulations. All right, so today's riddle for you is, what has 3 feet yet cannot run or walk? Again, be the first person to post the correct answer down below this video in the comment section, and we will send you a gift card for coffee on us. If you would like the answers to previous week's riddles, you can visit our website /riddles for those. And then lastly, later on today, I will be sending out our full update for the week. This update includes more than what I talked about here this morning, including our popular weekly tax tip. This week's tax tip talks about one simple step to avoid being denied any dependent credits that you may be due, like the child tax credit. So if you'd like this email and you're not getting it, you may subscribe at our website, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.